This is an update for the last day of the project. And so in the experiment, as you can see, still have the same stocks I bought before in the diversified long-term portfolio. And I have Berkshire, Chevron, Kellogg, all these stocks, and then my bond fund. I don't really know what the bond fund was investing in, but those other stocks were like chosen based on different sectors of the market. And then here in my short-term portfolio, I have AT&T. And my short-term portfolio had been suffering in the previous days, but today it has 56,000 because it went up. So I kept pressing the wrong button and making bad decisions and all this problematic sort of downward spiral stuff. But all of a sudden now, if you look at my trading history, or maybe I'll graph my portfolio, just in the past few days, this is a horrible graph. It doesn't show the recent progress. Order history. So as you can see here, I shorted some shares and I shorted them and then they went lower. Wait, no. I shorted these here and then they went lower. Then I shorted these here and then these went lower. Cause I shorted this and then it went higher and then I shorted it more and then it fell. So that was good. But I don't know what happened to the remaining of these shares. That must be a glitch. But anyway, so I had some profitable shorts and it went up in the short-term portfolio. Shorting is basically when you borrow a stock with the obligation then to buy it back later. You borrow it and then you sell it before you actually, you don't really own it. You have to buy it back because you borrowed it. And so if the stock goes up, then you have to buy it back at a higher price. And that's undesirable. But it is desirable if it goes down, because then you buy it back at a lower price, and so you get more money for it than you have to pay for it later. So that's what a short is. And I made a bunch of money with those. And so as a result, hey, it went higher than my 50K practice portfolio. So because of that, I thought that my experiment was going to result in the long-term portfolio being more valuable than the short-term portfolio. But as it turned out, at the end of the experiment, my short-term portfolio is really doing quite well. Yet, it should be noted that before I started doing well, I had 43,000 because I made so many mistakes. So short-term trading is quite volatile, and it could be that these recent gains were just random. So these have been the results of my experiment, and it was an interesting experiment, and the end result was that the short-term portfolio actually came out a little bit better, but still I believe that long-term investing is more profitable in the long run.